It's become obvious with the Bank of Canada's latest interest rate increase that now we can finally consider sections of the Fraser Valley real estate market to be in a full-blown crash. And in today's video, my plan is to help you better understand how we got here and what it all means so you can navigate your way through all the noise and negativity. Because yes, in the Fraser Valley, the average detached home prices are now down $500,000 from the peak. But first, if you wouldn't mind, it would mean a whole lot to me if you would please subscribe to the channel, because I'm trying to grow a whole community of people here across the entire country that are interested in learning more about Canadian real estate. And now that you've joined this community, please also click the like button for the YouTube algorithm, because that is the best way you can help me get this information out to more amazing people just like you and help grow this community. And of course, if you are looking for an agent here in Surrey or the Fraser Valley, you can book a call with me right now down below using the link in the description. And I know it's hard to pick an agent, so if you're watching this video from outside of my marketplace, you can always shoot me an email so I can connect you with someone that I trust in your market. Now onto the video, and a market that has come down a whole lot faster than anyone predicted. And maybe we should start with that. Of course, you always hear market predictions of crashes from people who don't own real estate or want to wish harm upon others in some sort of hope that one day they themselves will be in a better financial position. Because even after seeing prices already come down 27% or more in detached homes from the peak, there's always someone in the comments saying, well, that they'll drop another 50% from there. So immediately, you really need to put all of that noise aside. In reality, it's always something that we didn't see coming that has the largest changes in the market, and that works in both the positive and the negative. For example, work from home and 1.5% interest rates were both something that nobody predicted in 2019, but those two things totally changed the market by early 2022. And adversely, mortgage rates increasing from sub 2% to now almost 6% in just 6 months, well, that was not on anyone's radar. Again, lots of people are going to tell you that they predicted this, and I'm here to tell you, no, they didn't. They may have actually predicted a housing crash, but it was not because of the actual events. Rather, those predictions usually come from general negativity. After all, the worst predictions for interest rate increases was from Scotiabank on October 20th, 2021. At that time, a Scotiabank economist predicted that the market could not sustain and that the Bank of Canada would be required to increase interest rates an astonishing 8 times by 0.25% each time over the following 24 months. And at that time, everyone in the real estate market, the financial markets, banking, and even government thought that that was an absolutely absurd prediction, including myself. And yeah, it ended up being absolutely absurd. Absurdly low, because after the Bank of Canada's latest 0.5% interest rate increase, we are now already at an astonishing 13 25-point increases in half the amount of time that Scotiabank thought we would get 8 increases. Possibly the worst part seems to be that none of these increases are targeted at actually slowing down housing at all. In fact, they claim to be targeted at inflation and slowing down the overall economy. However, it appears to me that Eastern supply chains in both products and oil are the cause of the current inflation, and that increased rates are likely not going to fix any of those issues currently at hand. But let's go back now and explore each one of these interest rate increases. Starting off in January, where the increase didn't happen. Many people back then, including myself, were begging for the BOC to increase rates, and unfortunately, they did nothing. Then in March, we saw our first quarter-point increase. This already seemed to be playing a little bit of catch-up, and so we saw another 0.5% in April that seemed to put us in the right spot. So in the market, and particularly in the real estate market, we thought that we would just keep chugging along, and sure, rates would go up a little bit. Housing would, of course, be more expensive, but overall, it wouldn't be a big deal. Then June came, and we saw another 0.5 point. And this is where people started to feel the pressure. But in July, absolutely everything changed. And this is the point when even bullish people like me started to worry about where this market was headed. On July 13th, we received an unprecedented 1 full percentage point increase. In my market of Surrey and the Fraser Valley, the market all but shut off for 30 days while sellers and buyers and agents involved all tried to internalize what just happened. But as is with anything else, the market adjusted and prices dropped. Sellers moved on and buyers started buying. Then on September 7th, we had a much different effect. Our first 3/4 point increase. This seems to be the point where sellers accepted that truly they're going to get a lot less for their homes. But with prices dropping hundreds of thousands of dollars since spring, buyers started returning to the market, and that has now continued through October. But just this week, we have yet another 1/2 point increase. And really, this is only going to continue to make things even more expensive for everyone, even though prices are coming down. However, many people, again, including myself, were expecting an even larger increase than the one we just got, reinforcing in reality that, well, none of us can truly guess where interest rates, housing prices, or the economy is going to be, maybe more than at best 6 months in the future. Now, on top of all of that, the CBC released a new news story all about mortgage fraud happening in some major Canadian markets. Previous to seeing this article, I personally would have called you absolutely nuts if you said this was happening in my market. But now, after seeing that report, I do think that mortgage fraud is probably more prevalent in the marketplace than I ever had imagined. However, if you would like more of my thoughts on that particular CBC article, please go ahead and check out last week's episode of the Tom Story Show, where we discussed the whole situation. So now that the market crash is here and not getting better anytime soon, I thought I would share my thoughts of the future market so you might be able to better determine where you stand in this whole mess. First off, anyone that has bought in the last 12 months, there's a very good chance that if you're not already in a negative equity position, that you will be soon. My hopes are that you have the ability to continue making your payments and that you did not gamble on a variable rate mortgage, because if you did, well, this is the type of market that is the reason we have locked in fixed rates for 5-year terms. If you have the ability to hold on to your property, do just that. Sit back, shut off YouTube videos like this one, and just pay your bills. The reason I say this is because, yes, I'm still very bullish, believe it or not, on Vancouver and Fraser Valley real estate. But more on that in a sec. Next, people that owned before all this craziness, well, you still have equity and likely plenty of it. If I was in your shoes, I would just continue on. If you want to move, move. If you have the ability to purchase or you need to sell, do it. Just acclimatize yourself to the current markets before you do so, because, well, it's a lot different likely than the last time you made a move. Downsizers, so people either looking to sell, leave the market, or sell and get into a smaller product. If you're looking to sell a detached home and get into something smaller, either in type of property or price point, you are losing equity by the day, and you should sell right now. I feel bad for many people in this situation because, well, this is likely your retirement, and you may not have the ability at 70 years old to hold out for another 5 to 8 years for the market cycle to come back. And so you have to do it now. Downsizers, unfortunately, you have the most to lose right now. Anyone just staying put, I want you to do me a favor and make sure you are on top of when your mortgage renewal is due. Regardless of your situation, your mortgage payments will increase for sure. So have a plan. For some people, that's as simple as cutting back on other spending. For others, though, it could be restructuring of your current mortgage and other debts, and maybe even adjusting your amortization. Current buyers in the market, I think you'll see the bottom of the market within the coming 12 months. Most market bottoms occur within about 18 months or less from the peak of the previous market. So currently we are already, depending on your area, between 6 and 8 months into that trend. So likely right now, there's a very good chance that between the next 6 and 10 months will be the lowest price on the pricing chart when you look back at it another 6 months after that. But if you buy now, you will lose equity immediately. However, the largest losses now are likely in our rearview mirror, and that should give you at least a little bit of comfort. Never buy a property with less than a 5-year plan in place. Because if the market ends up being like the 1982 market, well, then you might have to wait for 6 years to see prices increase back to what you originally paid for the home. Speaking of 6 years, let's go back to the topic about why I remain so bullish. That starts with the fact that Canada is continuing its immigration expansion. This means that we are beating our targets, and with the addition of almost 1 million new Canadians to the market every 2 years, well, we're going to need a lot of houses. And the majority of those new Canadians are likely going to move to the Greater Toronto area and here in the GVRD. Next, historically, when we see interest rates increase, they are almost always back down to regular rates for that time period within 3 to 4 years. So I won't be shocked if by 2026 we're back into 5-year rates near or slightly around 4%. And last, I know it sounds like a broken record, but the overall supply of homes isn't getting any better. With prices sliding and monthly payments getting more expensive, builders are actually holding off on projects. And that means overall that even if it takes 5 years for the market to recover, that at that time we won't have enough new builds. And well, hasn't that really been the problem all the way along? I'm sure if you haven't already, you'll let me know your thoughts down below in the comments. Please subscribe and remember to click the like button. Just pay your mortgage. Don't worry about everything. It will be fine. And we'll see you in a couple of days.